Hello, good morning. You are welcome back again to another review for the week ended 27th March. Actually, it's equally also a monthly review, but I'll tell you from the trend of events, you can see that the month of March and February has been in what on the downside. On that note, investor has really experienced a really hard time this period, and you know the factors that were responsible for all this that movement. But for me, I see that as a time for investors that are smart, or I call them either design investor, intelligent investor, that understand the dynamics of stock market, that the trend is not always on the upside, but it oscillates to create time for you to buy, to create opportunity for you to buy low price and sell high, which is the mantra in the market: buy low, sell high. But there's what you see in the market will tell you that, oh, what is happening will still go further, or what is happening going to last for a long period of time. But you know, in events of event that's happening now, the trend around, this is the first time we're having this kind of event. You know that the market is not just down because the earnings of the companies has really gone bad, or there's a war in the economy, or the economy fundamentals has degenerated to a level that it can't hold water again. But we know that the factor that is driving this bearish market at this time is the what? Is the virus that is plaguing the world, is the disease that is ravaging the world, spreading like wildfire left, right, all over the world. Only few countries have not really had hit or had even touched by this virus. But I'm telling you that the developed economy are still bleeding now. Even the developing ones are also struggling, and Nigeria is one of the developing country and the frontier market that you can see that the entrance of this virus to Nigeria economy or Nigeria is also shaking the confidence of investors. But I will tell you that it won't last. Take it. The difference between 2008 to 2009 meltdown and this current coronavirus driven at that market is that then it was the financial sector, which is the engine room of any economy or the world, was shaking. Is the one that was down. But now this is the plague of a disease, and this is the first time that disease is bringing the economy, both is bringing the economy and life down to this level. But I'm telling you that there is hope. China has managed an event for almost 3 months, and today the death rate has reduced, and they are coming back to normal life. Government, their own government is putting out stimulus to stimulate the economy, while the central bank has the fund to push to the economy as to speak now to give you a speedy recovery. But I'm telling you that this coronavirus will definitely subside, and at the same time, once cure, and you can see that many countries are saying they have gotten cure. Israel, one other African country, mentioned that they have gotten cure for it. That if you take the drugs within 3 hours, 3 days, according to them, the sickness is off. That tells you that there's a direction we are going. The likelihood that this virus will not last for too long is very clear. But for me, I will tell you that, and in this event, because I said it like, if you follow my write-up, that this virus is killing economy, market more than people. As we speak now, all over the world, I think the number of deaths is about over 23,000 deaths, while we have cases about above 540,000 all over the world. You can see that these are not, but the economy of many countries has crashed, their stock market has crashed. But the good thing that this crashed stock market has also created opportunity for you to create wealth. Designing investor, this is the time for you to start putting position. Why did I say so? You need to look at companies that are selling at a high margin of safety. Companies that you know that their value, their worth is far below what is selling now. And these are companies that also rally back when normalcy or things start coming back again, when markets start recovering. That means you as an investor, these are the kind of place you should look at. Like I said earlier, if you have lost money in the market, because in a bearish market, you say it will rebound, you expect to rebound, you lost 10%, 20%, 25%, and 50%. And once you lost 50% in any position, unless there is that negative information that the company is not coming back again, or the market is closing totally, for our advice you say when you have lost 50%. If not, I would say you should buy time. If you also follow me, I said that in equity investment, after you applied fundamental technical analysis to choose your stock, and the next thing again you apply is patient. Now that we have seen the trend of the market, you can see from here to here market. Also, if you go to a yearly chart, you know that the market has almost doing 11 to 10 to 11 years trend, downtrend. You can see what the market is now. You can see all this way, like this where the chart started. If you look at the longer time frame, you can see that the thing is moving down. On that note, I expect that the market, it will bottom out very soon. It will bottom out very soon, very, very, very soon. But what you should do at this point, that as an investor, I'm preparing a larger video for this how to invest in this bearish market. The video is underway. We are still working on it. My team had already started collecting data on how to give you a full analysis on how to invest. But before then, I want to just give you tips what you can do at this point. One, this is time for you to keep your confidence. As an investor or trader, you don't panic. I said earlier, if what attracted you in so company are saying that we are lost up to 50%, you can still hold. But if not, if you are losing like anything below 10%, 10%, 15% is manageable, you can cut your loss and hold cash, because cash is king. But if you have lost 50%, I'm telling you, hold that position. Or you don't need to hold cash, that don't jump into the hold cash now to look at when the market will give a sign of rebound. You can start buying. If that same stock that you have lost 50% has potential of being among those stocks that will rally, you buy more to average down, so that when it go up at all, you know that you are average down, you are already in money. That is that. But don't just go, because if you go now, your time down money, you don't know how long the market will go down. I will tell you, you don't know. For that, whole cash as to speak now. That means keep your confidence. It is key. Any investment you are doing or anything you are doing, you don't have confidence, you are doing trial and error, you are bound to do mistake and get your finger burned. But when there is confidence, you have understanding, you don't panic. Even when others are panicking, even when others are saying, because you have understanding, you have confidence in what you are doing, you understand what you are doing, you don't panic out in such situation. You know when to be in the market. For smart investors that also know that in the market there are some peculiar things in the market, that if market turn back today, there are some stocks that are likely not to be available. What they do now, they do what called stage by stage buying. Don't put all the money, but you need to hold cash. Cash is king at this point. Your confidence should be there. When you're confident, you understand the market trend, know when exactly to plug in, when to take position in any of the stock you want to buy. The second tip you should have known that at this point, have what we call a watch list. I know if you are following the data for a long time, we don't play with that watch list. We'll have a watch list, especially those that are in buy and sell signal. You know that we'll have a watch list for both, for long term, for weekly trade, and for 6 months. We'll have stocks that you want to. That watch list will guide you. You know, the watch list in your own is that you have a criteria. You know. Oh, is it the earnings of the company we are using? Is it the price we are using? Is it the volume traded? Is it what you know what you are using to look at? It is when you get to this place that I will take position. That means you have those stock and you are watching something that once you hit it, it's the right time for you to buy. Also, if you want to sell a stock, also you need a watch list. That when the stock touches so price, I need to exit, because you have set target for yourself as a trader or investor that this we want to make on that stock. That is why I tell you that every investor in the market has different goals. A trader has different goals. The man investing for long term, for his pension when he retired. Like you want to have what we call financial independence. You know the kind of investment you should do, and the kind of returns you have for investment, that you know that yes, you are financially independent. You can use that your returns to take care of yourself at any time. When you attain that level, yes, you have arrived. You know that this is my investment, the returns on it can take care of my life. Those things, you are relaxed. If not, you also grow your fund to get to that level that return alone can take care of yourself. You don't need to have billions, you don't need to have trillions. No, it's not because when people become greedy, they want. If you have something to take care of you at your age, train your children, you don't need to kill yourself. You don't need to go into anything that will stain your name, either corruption or stealing. No, because you have knowledge, you have confidence in what you are doing, that if you can invest, moving your fund from one portfolio to the other, that's why I say complete portfolio management. When it's time for you to be in money market, you are there. The time for you to move to equity market, you are there. The time for you to move to bond, you are there. You know when to move around. That is where your watch list is very important. You need to have a watch list. The third one is that keep a very few stock. Keep very few stock. It's not a time for you to have plenty stock in your portfolio. Like what I tell them in the last training we had in December, that maximum stock that should be in your portfolio should be 6. Or you need to increase your volume. Maximum, those stocks that you know that you don't need to play all the stock in the market. It is when you want to try to play the you will not do mistake, or unless you are the type that want to be in a company GM to collect pack. No, that is not what you are interested in. You are interested in what? In making money. Invest wisely so that at the end of the day you'll be smiling to the bank. That is what you need to what? Keep few stock in your portfolio. Keep few stock in your portfolio and have what? Volume. That volume will give you good money. If you have good, as you speak now, those that have Zenith Bank, you have good volume of dividend, your 2 naira, 50 kobo plus the 30 kobo, are giving you good return for that investment. Keep few stocks that you know that their dividend yield is high. You know they have that the sector they are operating, you understand the model of their business. That's why you need to know this. Once you know, you don't panic out. That confidence I mentioned earlier. If you know what we are doing, even when others are running out, you keep quiet. You know what to do at the right time. The last one there is that we should keep what? Cash. Cash is king. These are the 4 points I know I should share this morning with investors and traders, that you keep cash. Yes, you can be little trading here and there. You can see that in the last week, like Thursday to Friday, like see that the market tries to stage a rebound, especially for the financial sector, the insurance and the banking sector, because their prices are low. And also, if you look at those stocks in that sector, they are the stocks that have high margin of safety. And you know that anywhere in the world, the banking sector is the engine room. That means whether the economy is in depression, in recession, in boom, this sector will always be there. They will make money, no matter, even though their dividends will drop, because their price have dropped. Even when dividend drop, you still make meaning to you. That is why you need to look at what is the business of this company you are running to. This is as a good investor, look at the things you are looking at. Or less trader that want to buy any stock, move up, buy and go. But most time, if a trader you are buying any stock, when it goes against you, market goes against you, because you'll be hooked. But if a good trade investor, you know that this is why you are buying this stock, this is why you're there, you can hold that stock. Even when prices are going down, you keep quiet. You watch. You know what to do at the right time. For me, this coronavirus driven down market or bearish market is an opportunity. I call it wealth creation or wealth transfer. If you know what to do at this point, you don't need to panic. Yes, the economy is struggling because crude oil price has crashed, and at the same time, government is struggling in terms of revenue, and also that should give you an insight of what is likely to happen in the fixed income market, especially the FG bonds. You should know that if government is struggling, how would they meet up some of their responsibility in terms of servicing the debt? That means those bonds now, you don't know what happened, you don't know how long. Like if you listen to what the Minister of Finance said, that if this trend lasts for the next 6 months, it might go back to recession. I know when it's recession, things will contrast, things will just slow down. That's why you need to invest wisely. And I know that fine, the way it's going throughout the war, before the end of second quarter or early third quarter, I think this coronavirus event should be thing of past. If you take the trend that I told you earlier that in China it took about just 3 months before you're able to reduce the rate and everything. Now you can see that they are coming back to life again. Their train station has started working. They open some of their airports. Only that they have to put measure again just to make sure that this thing didn't spring up again to that level again. This one is not going to kill the war, but it's a lesson for you and I that everybody should be conscious of his environment. We should know what we are eating and what we are not eating. And also how I started. For that, this bear market has created opportunity for you and I to buy stock low and make money. Knowing that in our market now that the interest rate in the market, especially in the money market, is low, and the treasury bill is about just for a whole year it's about 5.8% or 6.2%. If I'm exactly correct, between 5.8 and 6.2 for a whole year, and that is about 365 days. If you take good investment in equity, I'm telling you, your dividend yield alone is more than what I'm just telling you now. That means if you very wisely, this is time for you to reposition your portfolio. As I mentioned that it's possible that the federal government will start defaulting in their debt servicing, because you feel like a country that is servicing debt with more than 50% of its revenue is not wise. It's not wise. You should know where to be now. But if the economy is doing well, there are some companies that because of the nature of their services, their product, they will still make money. whether we are recession or in boom. For that, this is how you should align with that. You should understand, just say, keep your confidence, have have a watch list that will guide you, and keep few stocks and hold cash. We are holding cash to see that at the time you notice a rebound, you can buy low and average down, and you go with the trend axis recovery. That is what you should do now. As I said, if you look at the margin of safety in the market now, the stock that had the highest margin of safety as to speak now is First Bank. That is called the FBNH. It has the highest margin of safety in the market as we speak. If you look at that stock now, it's selling around the 4 naira, 5 kobo. But the margin of safety, that one margin of safety, you look at the company, book value and the current price, it gives you an idea. I'm not talking of intrinsic value or calculation. I'm looking at just margin of safety, like what the book value of this company is and the market price. It gives you that there is a real margin of safety that if you are buying that stock now, the risk is very low, even though it's not moving as others, but your risk is very low, and the probability that when others are going up is going to go up is high. The next company there that has high good margin of safety is Fidelity Bank, about 325%. The next one there is a UBA, in terms of margin of safety, and the next one there is Zenith Bank, high. You see, Access Bank, good high margin of safety. You look at stock like stock like Steplat, good high margin of safety. Stock like Cavaton, good margin of safety. You can see Access. So look at stock like WAPCO, Lafarge, good margin of safety. But I'm telling you, those high cap stocks, I'm telling you, yes, they are the one that has the highest price in the market. But I'm telling you that the margin of safety there is very low, because the price and their book value is in opposite direction. Price is higher than their book value. Fine, we agree. And also the market has suffered almost. I say the market is around 11 years low, 10 years low. Those prices are still high compared to their book value. A stock like Nestle, yes, it is around 768 naira, good. You can see stock like Dangote around 129 naira, 70 kobo is good. But I'm telling you, your margin of safety there is still what? Negative, because what? They are still high in terms of, if you're going to relate them with their book value. Fine, they have capacity because of the nature of their business and all those stuff. But I'm telling you, these are stocks that are highly capitalized in the market, and now they are selling at high cap stocks. Stock like Dangote, also stock like Nigeria Brewery, Boa, Nestle. These are stocks that you see their margin of safety is, as speaking now, is negative, but because of the nature of their business and the price they are selling, you can still look at that. But for me, I'll still hold not to jump into that. But for others, you can start buying in stages and watch where the market is going. Yes, now that the government has said, okay, partial close down in Lagos for 2 weeks. Yes, market that the online trading for the market is still on. That will not stop the market. We can't lock down the economy totally, but only that to reduce movement because of the spread of the virus. But I believe it's good for us so that we can come out of it, in no distant time, and that will also do good for all of us, both investors, businessmen, and all. Because if the economy is doing well, it's going to reflect on the economy, and we expect that if the war bounce back, the crude oil price also bounce back. That will also help our economy to also look up, knowing that we are still a mono economy that depend on one source of revenue, which is the oil. When oil is shaking, Nigeria is already catching cold. You can see what is happening now. But for investors, I'll say there's no time to panic, especially as we're seeing the dividend yield of many companies are high, and also we're expecting dividend this period. You can still take your dividend, because I believe that this virus-driven market won't last for too long. On that note, investors should not panic, take position, and expect us to roll out the how to invest in full. In this bear market, you don't need to panic. We'll give you those stocks, why you should invest there, the reason why you should buy this stock, all will be spread out. But for those that are in buy and sell signal, we might not give buy and sell signal today for traders, but for those that are long-term and medium stocks for you to take position, they are there already. Those long-term positions, you can still go there. They are still there. Take them. We're not adding a new one today. We are still watching the market. Once we also review, we also update the watch list, the ones we are looking at. But for those that are new subscribers, you can still watch those ones. We are still giving them for medium term, for the 6 months and 1 year, and watch. But for traders, let's still watch how the market be today, because yesterday the president announced that partial close down Lagos, Port Harcourt, and Ogun State. Let's see how it's going to influence activities and things happen. For me, there's no need for panicking. Thank you and God bless you.